What's going on, everyone? My name's Jose, and today on Breaking the Cycle, I'm going to be showing you guys exactly what I'm looking at in terms of stocks for this upcoming week. Before we start this video, I wanted to give a huge shout out to all of the new subscribers that the channel has had. If you guys like videos like these, consider subscribing. Make sure you give me a thumbs up and enjoy the video. I'm not going to go too in depth as to why I think you should look at these companies, but I will show you a reason here and there as to what you should look out for when you're looking at stocks. Let's go ahead and jump into the computer to see our first stock. So the first stock we have here is Facebook. The reason I'm looking at Facebook right now is because during the past 5 days, they've actually lost about 4%. And when you compare it to the month, they've actually only gained about 5% overall. So if you look at this graph, this point right here is actually a very good point in order for me to purchase some stock. Obviously, they are a little bit on a premium. That means that I'm paying a little bit more than usual, thinking in the long run I think Facebook is going to do really well and they're actually going to surpass $230 very soon. I like to look at companies that are well established, and one way that I see this, in just my personal opinion, is when you click on max amount of time that their stock has been trading, and you can see from their beginning of time when Facebook came out, it was at $40. I wish I was smart enough to invest in Facebook in 2012. And now if you look at this whole graph right here, you can see that it's trending up. There are some ups and downs, as there is in every single company, but ultimately you can see that they've gone up 500% since their initial time in the market, which is from 2012. So in 8 years they went up 500%. And looking at graphs like this, like for companies like Facebook and other companies, and when you see their graph going up, like it's a positive graph over their whole period of being on the market, it makes me feel comfortable investing in companies like these. So for the second company that I have here is Tesla. So the reason I have Tesla here is because their stock has grown exponentially over the past couple of days. Like if we look over here in the past 5 days, it hit $1,600, almost $1,700. That is insane. A lot of people at this point, I'm sure, sold off a lot of stock just to get some profits in. And now that it's stabilized and is going down, I want to see if the stock can go below 1,400, and then we can evaluate to see if I can add some additional shares, or you can actually just do fractional shares, because one share at $1,400 is very expensive. The good thing about like Robinhood or M1, they allow you to add fractional shares, so as long as this stock keeps going up, that fractional amount that you added to your portfolio is still going to increase. So that's one of the great things about fractional shares. And for the next one that I have here is Abbvie. I actually mentioned this a couple of videos ago, and I am very interested to see what their potential is. I'm looking at their 5-day graph, and they're actually going down. And obviously that's something that could be alarming, I guess, but if you look at their 1 month growth, it's very steady, it's sideways. So now that means that maybe there's a possibility for me to go into this company and buy some shares of their stock. I'm thinking they might go below 97. When they go below 97, whether it's 96.90 or 96.50, I'm definitely going to add some shares to my portfolio. And the next one, actually I had some conversations with this one with my friends, and it's Alibaba. We actually saw this a couple months ago at $190, and we didn't buy into it, or I guess I didn't buy into it, but right now we would have been reaping the benefits. And this is basically, if you don't know Alibaba is like the Amazon of China. They focus on people or companies that want to buy products or create products, and they connect them directly to a supplier in China. I've done this with my Amazon business, and speaking to these companies in other countries like China, it just makes it so much easier, and their platform is amazing. I definitely recommend you to look into this company if you can. This is definitely going to be a company that will grow exponentially later on in the future, in my opinion. So during the past 5 days, Alibaba has actually gone down a little bit in price, and it's not too alarming. Just remember, I'm playing the long-term game, so I'm thinking that this company in 10, 20, 30 years are going to be, Amazon worth almost $2,000. And the last stock that I have on my watch list is Jamf. So Jamf is a new IPO that recently came out. It came out on July 22nd. It actually came out at like $47 and change. And right now it's trading at $39.70. As I mentioned in my previous video, I'm actually going to look forward to seeing if this company can go up or a little bit more down so that I can keep adding to my position and try to see if I can make some money in the long term. Now remember, it's Jose here. We're trying to break the cycle so that our future generations are wealthy and healthy. I'll catch you guys on the next one. Peace.